Welcome back. Next module 2, Analysis and Interpretation of Financial Statement. In the previous slides, we were discussing about what is meant by management accounting, what are the nature, concept, scope, and how it can be implemented in the organization and all. Under management accounting, one of the major activity carries out is that analysis and interpretation of financial statements. As you all know, one of the major functions of management accounting is to analyze and interpret the statements so as to provide useful information to the top level management for effective decision making. Next, what is meant by financial statement? Financial statements or final accounts are the summaries of financial accounts prepared periodically by a business. These are the end products of financial accounting. Financial statements includes the preparation of the following statements. First one, income statement or profit and loss account. Next, statement of retained earnings or statement of changes in owner's equity. Next, balance sheet, otherwise known as position statement. Next, fund flow statement and cash flow statement. We will discuss about each and every topic in detail in the coming sessions. First one, income statement or profit and loss account. Income statement is a summary of all revenue items, that is expenses and incomes related to an accounting period. It is prepared according to the matching concept or accounting principles. Accordingly, expenses and losses incurred for an accounting period are matched against the revenues earned for that period. The result is called either net profit, where total income for the period exceed total expenses, or net loss, where the total expenses exceed total income. Thus, the income statement discloses the results of operation of the business. The income statement is another name used for profit and loss account. We can use synonymously in profit and loss account or income statement. Profit and loss account is prepared in account form, whereas an income statement is prepared in vertical form. That is the only difference between an income statement and a profit and loss account. Profit and loss account is as the name suggests, it is in a T shape or account form, whereas an income statement, it is prepared in vertical form, otherwise known as statement form. It's an example of an income statement. Gross sales less returns, you will get net sales. From net sales, if you deduct cost of goods sold, you will get gross profit for the period. From gross profit, if you deduct operating expenses, you will get operating profit or earning before interest and tax. EBIT is otherwise known as earnings before interest and tax. And before going further, let's discuss about operating expenses. Usually, operating expenses consist of administrative expenses, selling and distribution expenses. Sometimes operating expense will be given as a single amount, otherwise it may be split into administration or selling and distribution expenses. So operating expenses is a heading given for those three cases. Okay, from operating profit, otherwise known as earnings before interest and tax, we will add non-operating income and less non-operating expenses. Usually non-operating expenses may be interest and depreciation. There are other types of non-operating expenses. From problem point of view, we mainly deal with interest and depreciation. And finally, we get net profit before tax, otherwise known as EBT, earnings before tax. From EBT, we will deduct tax, or otherwise known as provision for tax, and you will get the end result, net profit after tax, otherwise known as EAT, earnings after tax. You have to go through this income statement because for the further cases we are going to deal with, we have to identify the net profit after tax or otherwise known as earnings after tax on the basis of this statement rather than a profit and loss account. Next one, statement of retained earnings. A statement of retained earnings is prepared to explain the changes in owner's equity over the accounting period, otherwise known as items any amounts that are relating to owners. It discloses all appropriations made out of net profits during the period and net surplus added to capital or owner's equity. Capital is otherwise known as equity or owner's equity. It is also known as profit and loss appropriation account. We might be familiar with that term. Statement of retained earnings is another word for name for profit and loss appropriation account. And it is also known as statement of changes in owner's equity. Now we will deal with format for statement of retained earnings. This is the title of the retained earnings statement. First of all, we will write net profit for the year. From net profit, we will less or deduct dividends paid or any sort of drawings. The both items are different. Just for the time being, I am writing dividends paid or drawings. Next one, transfer to reserve. Any amount transferred to the reserve from profits. It has to be deducted. Next one, transfer to dividend equalization fund. Next one, transfer to sinking funds. And finally, balance of the profit carried forward from last year. The balance of profit carried forward from last year, it is not supposed to be deducted, it has to be added with the net value received after deducting the above 4 items. Okay, finally, you will arrive at profit carried forward to the balance sheet. This will be the profit that will be taken to the balance sheet format. This is how a profit and loss appropriation or statement of retained earnings. In the coming sessions, we will discuss about balance sheet and how we are going to prepare balance sheet. Unlike the traditional T-shaped, we are going to deal with a modern type of balance sheet statement. That's all. Thank you.